This is Cece. Welcome to the Orbit. It is Tuesday, January 2nd. We are starting 2024 in the red. We've got stocks lower, especially mega cap tech stocks. They are leading the markets lower. And we're looking at the S&P 500 down about 3/4 of a point. We went into that long New Year's weekend, the holiday weekend, with vols extremely low and expected moves extremely narrow. And that's the one result that we're going to see from this first day, perhaps, is that vol ticks up a little bit. And you see that right here. We've got about 15 vol. That was about 9 vol on Friday. So pretty significant uptick in the 0 DTE. And you even look out to tomorrow, the 13 vol. We have the non-farm payrolls on Friday. That is about 13 vol. This is still historically very low. But it is, the sell-off this morning is getting vol up a little bit from the bottom lows that we saw over the last week or two. As far as levels we're looking at in the S&P for the end of the week, we've got about 4,690 on the downside and 4,780 on the upside. And that gives you a sense. That low on the expected move, the bearish consensus on the expected move, takes you a little bit lower than this low. So that's something to keep an eye on if this selling did kind of continue for the next day or two. Keeping an eye on that level, and that lines up with about the expected move. The expected move is a little bit lower. Where we are on the chart pulling back, you can see we did this little 4,500 sideways after a rally, and then we did another rally, and we're doing that same sort of sideways at the 4,700 area. Whether this resolves to the downside or to the upside, we don't know. But it's likely to happen in the next week or two. And we're either going to see it pull back under this sort of flag formation, or it's going to break out again to the upside like it did back here. So we will see probably in the next couple of weeks on that. To the Qs, we've got about a 0.5% expected move for the rest of the day, 0.4, a little bit less than 0.5%. And then for the week, we are looking at about a 1.3% expected move. It is down 1.8% today. So that shows you that options are still extremely low. And it's going to take a couple of days of red probably to get them to wake them up entirely, and get that VIX back towards, say, the mid-teens. You would have to see this kind of day, maybe 3 days in a row. So that gives you a good sense is that we are already down today more than options are pricing for the rest of the week. You're sort of seeing that same, flag formation, breakout, another flag formation yet to be resolved. We are actually a little bit, if you zoom in here on the Qs, we are a little bit lower than this low from 1220 already. So something to keep an eye on there. And of course, the end of the week, 397 on the downside, 407.5-ish, 408 on the upside. So if this snapped back and rallied, options are not pricing it to go back here. And again, a reminder, we have non-farm payrolls on Friday. That is the big economic news of the week. IWM is kind of interesting. It is down the least, and this is something that we've seen a little bit over the last month or so, month and a half, where mega cap tech companies like Apple are doing one thing and IWM is sort of doing the other. And as you see, it's only down about not even 1/4 of a point, which is less than the S&P and less than the Qs. And, so some relative strength in small cap there. These are not the stocks that are getting hit today. It is those mega cap stocks. For the week, we are looking at options are basically pricing it for it to hold and hug this 200 level. We saw a virtual pretty close to a pin at 200 for Friday's expiration, and options are pricing about a 196 to the downside and 204 to the upside for the week.